Hello, I'm Chip Stites, and this is The Laughing Retirement. We're going to tackle a a thorny subject today, something that everybody worries about. But maybe there's a reason that you shouldn't, and that's taxes and a foreign government. Now, Italy's known for its bureaucracy. We're not going to try to hide anything here. And Italy's tax rates are very different than in the United States, but the Italian government has a special deal for people who want to move to the southern part of Italy and central part of Italy. That's the Italians call the earthquake zone, or Mezzogiorno, the middle of the country and south, and includes Sardinia and Sicily. We'll get into that in a second. But I want you to listen to this and what they're offering. And then at the end, we're going to consider what are the real taxes or costs in the United States, and what are you getting for the taxes you pay in Italy? Because they're very different. So I'm going to start a screen share now. And taxes Italian style, or maybe it's not as bad as you think it is. So let's take a look first at the Italian tax brackets. Now, if you look at that, you might notice a couple things. Number one, there's no zero tax bracket. Number two, the tax brackets are condensed much more in the United States. And number three, the brackets after 25, 35% are actually higher. Now, first of all, Italians don't earn as much as we do in the United States. There's not as broad an income bracket for most Italians, without exception. Italians earn less on average than we do in the United States. So you'll also notice there's no zero bracket. Everything gets taxed. 23% starts out from 0 to 15,000 euro. So if you look at this, you would say, oh my God, that's a lot. Well, first of all, the United States has a tax treaty with Italy. You can't be double taxed. So that's the first thing not to worry about. Doesn't mean that you can't pay more taxes, but it does mean that you can't be double taxed. But when you pay taxes here in Italy, you're getting more than when you pay taxes in the US. And we're going to talk about that too. So there are advantages to living in Italy and being a foreigner. And let's keep going. We call it the 7% solution. It's not exactly new. It's been changed a couple times over the last couple of years, but the idea is to promote living in Italy and the Italian lifestyle to people who are interested in moving here, and to give them an incentive to move to the southern part of Italy in what's called the earthquake zone in the central part of Italy. We live in the central part of Italy in the part that's called the earthquake zone. We've been here for 6 years or so, and we haven't had a problem. Now, this incentive is a flat 7% tax for 10 years to foreigners. Now, what income is taxed? Well, very simply, if you have income, it's taxed. Your pension income, interest income, dividend income, royalty income, rental capital gains, any kind of severance, anything that you get in the given year that you are taxed, that you are submitting your taxes on, you're taxed on. Income inside IRAs would not be considered because you are not in receipt of that income. Now, requirements for becoming a 7% beneficiary. Number one, you have not been an Italian resident for the last 5 years. You draw a pension from outside Italy. Your pension comes, or you're a resident of a country that has a tax treaty with Italy, and you move to an area designated in the tax code. Now, that's pretty simple because that area is kind of broad. As a matter of fact, if you want a list of the towns and the areas, all you have to do is email me, info@thelaughingretirement.com, and I'll send you the list. So again, what are the requirements for getting this 7% tax beneficiary? One, you haven't been an Italian resident for the last 5 years. Two, you draw a pension from outside Italy. Three, you're from a country that has a tax treaty with Italy. And number four, you move to an area designated in the tax code. Where can you live under the 7% agreement? Well, Sicily, Sardinia, Calabria, Campania, Basilicata, Abruzzo, Molise, and one of my favorites, Puglia, plus 15 cities in Umbria, about 85 cities in La Marche, and 13 cities in Lazio. We live in an area outside Rieti in Lazio. Now, does Rieti in Lazio qualify? No, it doesn't, because it's got more than 20,000 people. Does you wanted to move to Puglia and you say, I want to move to Bari? Well, Bari has over 340,000 people or 325,000 people. So that's not going to apply. You have to live in an area or in a town that has less than 20,000 people. So how to qualify in those areas? Anytime you move to must have an official population of less than 20,000 people, or it doesn't qualify. And I just used the example. If you want to move to Puglia, but you want to move to Bari, it's not going to qualify because Bari has 325,000 people. If you want the list, you can go to the National Institute for Statistics, or you can email me at info@thelaughingretirement and ask for the list, and I will send you a list of the provinces and towns within other provinces that apply or are applicable for the 7% incentive. What am I missing here? Are there any catches? Is there anything that we hadn't thought of? Well, you must apply in the year after you become an Italian tax resident. So if you've been here 183 days as an Italian tax resident, you have to apply in the next year. You must pay all the taxes due in the deadlines, and taxes, there are 2 different tax deadlines here in Italy. No deductions apply. 7% is a flat tax. It's to your income, period. Not a discussion. The only catch to that rule is that if you have sources of income from multiple different countries, and one of those countries is not or does not have a tax treaty with Italy, that income won't apply. So that income will be subject to the normal tax rates. All the other income with tax treaties is subject to the 7%. Not too difficult, not hard to understand. What are the other tax considerations? Well, I already mentioned that the crossover point is 183 days of residency in Italy. Now, that's a little bit different than in the US, because the US is one of the few countries in the world that taxes by citizenship. If you're a citizen of the United States, you pay taxes there. In Europe and Italy and most of the world, you pay taxes based on whether or not you're a resident. And in Italy, the qualification for a resident is that you've been here over 183 days a year. There you have it. What else is taxed? Now, I'm making you aware of this, not because it's part of the tax of the 7%, but because it exists. And one of the advantages of the 7% rule is that it will allow you to prepare your assets for the RW series. And you have 10 years to do that. You've got plenty of time. The RW form series is a form that asks you about all of your assets, all of them. Your houses, where are they? How many do you have? Your financial assets, do you own stocks? Do you have a brokerage account? If you own real estate assets, they are taxed annually at 0.76% on the purchase price, not on the value today, but on the purchase price. For example, supposing you had a home that you bought 5 years ago and you bought it for $100,000 and today it's worth $185,000. Well, it's taxed on the $100,000. Now, suppose you had a stock brokerage account, and the brokerage account will be taxed at 0.2%. Now, those taxes aren't onerous, and they do not apply to you if you have the 7% tax for a decade. So now you can find ways to lower those taxes, to do other things with the money that are not taxed in the same way. In other words, you've got some time. The US and Canada have tax treaties with Italy that forbid double taxation. As I understand it, the US Social Security and government pensions from both Canada and the US are not taxed. Now, I've read two different things. I've read that they are. I've been told by my tax attorney they are not. The 7% rule means that the only thing you will pay on is 7% of your income. That's all, nothing else. You don't have to worry about the RW series or the real estate tax at 0.76% or the financial tax at 0.2%. So this makes life very easy for a decade. You've got a decade to figure out the things you can do to mitigate taxes in Italy. And there are some things. Now, finally, there are two other very important considerations. Number one, listen to this carefully, please, because when you looked at that initial tax bracket list from Italy, that looked awful high. 43% after 50,000 of income is a lot. But in Italy, one of the benefits of living here since 1978 is universal health care. If you're a citizen of Italy, you don't pay for it. If you're an expat like we are, my wife and I together pay a total of $64.50 a month. That's it. That's all we pay. We have been in and out of hospitals. We've been to the ER. As a matter of fact, one of us spent 5 hours in an ER, had intravenous fluids, saw 3 doctors, had 3 sets of x-rays, I got intravenous medicine, went home with prescriptions, and the charge was $3.20. True story. So one of the things you have to do to compare US taxes and Italian taxes is to take all the money you spent on your insurance, all the cost of your deductible, all the cost of your copays, all of your out-of-pockets, anything that insurance didn't pay, and add that into your taxes. And that would compare to the total taxes you pay in Italy. And you're liable to find out it's not too much, that 7% tax is a darn good deal, because once you've been here for 6 months, you qualify for the Italian tax code system. And once you get your charges for, you qualify for the Italian healthcare system. And once you qualify for that healthcare system, your expenses on an annual basis are fixed. At least ours are here in Lazio. That's what we pay, $64.50 a month. That's it. Period. End of sentence for both me and Shauna. In the United States, we were paying $1,650 a month, plus a high deductible, plus our copays, plus our out-of-pockets, plus the medicines. Huge difference. Number 2, I'm not a tax expert. I have been told by tax lawyers that my Social Security is not taxable. I have been told, I have read things that say it is. I have been told by commercialistas that it isn't. I have also read that the 7% tax rule applies for 9 years, 10 years, and 5 years. In the United States, it's the same. I worked with 2 CPAs for years. And I can tell you that if you give information to one CPA about your taxes and information to another CPA about your taxes, and you ask them to do your taxes for the current year, you're going to come out with 2 different numbers. It's the same thing here. It's no different. So what you need to do is to consult a bona fide tax expert specializing in foreigners' taxes, or a commercialista is what they're called here. And I'm working on getting a couple names so that I can send you some people that are reputable and know what they're doing. Now, if you like this video, I'd like you to subscribe to The Laughing Retirement. If you're interested in finances and you have some concerns about how much you can take out of your finances that will last for the rest of your life, we can explain that to you as well. And I can show you exactly how to do it. Not only that, but I have classes on how to do that. So we have finance information, we have tax information, we have moving to Italy information, and we have information on how to create the best time in your life in the Laughing Retirement. So we have our Facebook community called the Laughing Retirement. We have this YouTube channel. I hope you'll subscribe, and I hope you'll join us. And if you have questions about your finances, send me an email at info@thelaughingretirement. I always offer a free 20-minute, no obligation, no pressure to talk with me and to learn more about how to create the best time in your life. I'm Chip Stites, and it's great to have you here.